Hello, everyone. Welcome to the Ashworth Wealth Weekly Market Update. My name is Todd McChesney. I'll kind of jump into this week's slide. Take a couple minutes this morning. We're highlighting the S&P 500 gains and how they're now driven by earnings growth, with technology expected to fuel about 60% of that. If you look at the chart here, this is effectively saying what percentage of the growth is coming from each sector. You can see 51% from information technology, 9% from communication services. So technology and communications is making about 60% of that. The good news is that earnings growth, not multiple expansions, increasingly fueling the bull market. The share of the S&P 500 returns driven by earnings growth rose from just 27% in 23 to 84% in 25. That's huge because we want earnings to, we always talk about how markets grow or decline based on fear and greed in the short run, but they always grow based on profitability in the long run. So while a lot of the growth the last several years have been based off of greed, you're paying a higher multiple to get into some of these positions, that's fueling the S&P growth. Well, now we're looking at 84% of the growth of these stocks, or the growth of these stocks that make up the S&P 500 are expected to be based on earnings, not multiple growth, which is based off of greed, for lack of a better word. So we look at that. It's important. Now, the earnings per share growth this next year is estimated, this year, 2026, is estimated to be about 15%. That's what's interesting. Some people are skeptical of that because that's basically 3 times the consensus for the nominal GDP growth this year. Nominal GDP growth is expected to be north of 5% this year. And so we'll see how that affects things. So really, when you've got technology and communications making up a large portion of it, that's great, especially if they're being profitable. However, manufacturing activity is currently kind of weak, and consumer sentiment is at rock bottom, and so we'll kind of see how that plays. But the areas that are driving market earnings growth are not really tethered to the traditional economy. So you can see that like I mentioned, that 60% is a big piece of it. So we see the AI build out is continuing to boost economic growth, but it's through capital, not labor. Well, one kind of thing I'll share with you in closing is typically if you open up a data center for an AI project, you may invest $1 billion in a data center, but it only employs 100 people. And so that's a concern moving forward, to kind of see how the economy can handle those kinds of scenarios. So we'll kind of keep an eye on that and see. For the most part, just understand this: we can't just invest in the S&P 500, especially when 60% of the earnings growth is expected to be from 2 sectors: information technology and communication services. The best way to do that is to make sure you have that as part of your portfolio, but also make sure that we're globally diversified. Just like for 2025, international portfolios were up north of 30%, and so that's important to make sure we globally diversified and keep that on a basis where we can have some good growth and not have a lot of ups and downs as the market continues to react how this quote unquote new economy, where we're really going to be more AI based than before. Clearly, industrials, healthcare, materials, consumer staples, utilities, these kinds of things are very important to the economy. Even energy. Energy is obviously down right now with the cost of oil down, but those are the things that drive the economy in the long run. So we'll have to kind of see how this plays out. So we continue to think that a globally diversified portfolio is the best way to go, with a portion in bonds as well to kind of offset some of those ups and downs, especially as you're accessing your portfolios into your retirement years. Hope that makes sense. If you have any questions, feel free to reach out. We'll talk more about it in detail as we get ready to do our spring reviews upcoming. So reach out to anybody in the office if you have any questions. We look forward to seeing you soon, and especially those of you who are who are interested in coming to the client education event in February. Please RSVP for that, and we'll be in touch on that, and we'll talk to you soon. Thanks.